Well, welcome. Thanks very much for sparing some time. My name's Craig Massey, the CEO of AI Forge. Quick show of hands. Who here is an investor? Oh, good. Lots of people in the audience. Perfect. So I'm making it my mission this afternoon to explain to you guys why, if you invest in AI startups, you're going to get significantly higher returns and a hell of a lot quicker. But let me establish my credentials first of all. So in the whole kind of tech startup ecosystem, I've actually started 9 companies. I've had 2 hideous crash and burns that cost me an absolute fortune, but I've had 6 exits. 3 of those, pretty substantial, multi-millions, and I sold this last one, your keys, to those lovely people at Zoopla for 28 million. In addition, I've created 2 incubators. If you know anything about them, it's super early stage. Pre-seed, usually it's great founders with a bit of a wobbly business idea. They come into the incubator, at the end of it, it's a fantastic idea. So I started Block Dojo, which is the UK's only blockchain incubator. We sold very quickly. We then started AI Forge, which is the UK's only AI incubator. Each of those companies have started 55 funded companies over the last 3 years. Now, on top of that are my 9 companies, that's 64. And I've also invested in 27 companies. So I promise you, if you are business angels, I've gone through every single pain that you have. I've been trampled all over by venture capital. I've been washed out. Every horrible thing known to man, I've encountered it. But what is it we do that's different? We all know a forge. A forge is to take raw materials and turn that into something of value. However, it's what we do with the raw materials that makes us very different. Because through an awful lot of incubators, all they produce is a load of oldies. Whereas through our incubator, you can make something a lot more substantial. So at AI Forge, we build bridges, not balls. And we do lots of them. So for instance, last year we started 35 AI startups, fully funded. Now it's not easy. Let me tell you how. We do a 12-week, very intensive, brutal training program. We are known to be the hardest in the industry. You don't get a gold star for tying your shoelaces in our program. It's a lot of tough love. And I assure you, there are lots of tears before bedtime. But that's what you get when you do tough love. I must have been bad in my last life because we do that 3 times a year. It's like Groundhog Day. As soon as we're finished one, we start another. But the important point for you guys is that having gone through that program, every single company that finally makes it and presents to investors has been 100% totally validated. So one of the key differences that we do is that we surround our founders with exited founders. So I've got 12 people in my team. All of them, they know startups. All of them have had exits. However, there's one standout employee. She's amazing. She's Annalise. She's lightning quick. She never takes a day sick. She never even takes a paycheck because, of course, she's our AI algorithm. And as you know, I'm gray-haired, a little bit cynical. I've been around the block. I've got scars to prove it. So I said to my team, hang on a minute, right? Because her job is to analyze all the applications into our cohort. And I said, well, if she's getting rid of some of these, she may throw the baby out with the bathwater, right? We may lose an Uber. So I said, I don't trust her until I check. So unfortunately for cohort 3, I personally went through 532 applications by hand, manually. It took me 2 weeks. It was the worst 2 weeks of my life. My eyeballs were bleeding. It was hideous and painful. We then handed it over to Annalise. She took 1.4 seconds to analyze all the applications. And honestly, we were out in terms of 8 applications. We were absolutely 100% aligned apart from 8. And I just went, wow, this amazing. I mean, it's just, so she now takes responsibility for getting rid of 350 applications per cohort. We're using AI. And then the rest, they make it into the program. So we start with 500, we then go down to 150. And over the course of 12 weeks, we chop the companies out that are the weakest, the ones that do not measure up, the ones that are a mom and pop operation, the ones that are uncoachable, all the terrible founders that you don't want to invest in, they don't make it. So at the end, from all that hard work and due diligence, we're left with about 14 companies. And they are the companies that present in week 12 to about 300 investors. And we get 75% of those fully funded. So let me explain why AI startups are going to get higher valuations and quicker exits for investors. The most amazing thing is corporates are getting involved much earlier. I mean, normally they don't care about anything until it passed to Series A. They're actually getting involved in pre-seed, which is really weird. Now, are they doing this because of their great benevolence to startups? Of course they're not. They're greedy. PwC have forecast that AI will add another 15 trillion to the global GDP by 2030. Now, what does that mean? It's a huge number. It equates to 6 of the largest countries in Europe. Huge cost savings and new revenues generated. But as we all know, corporates are utterly hopeless at innovation. Literally the most oxymoronic job title in a corporate is innovation director. Because first of all they care about is covering their backside in case this project goes pear-shaped. And the way they do that is they get as many people in the corporate to kind of join in so that they can kind of lay the blame at other people's doorsteps. And what happens, it's management by committee, which strangles any entrepreneurial activity at all. So corporates are slow and not innovative. So what we do is we run an innovation hackathon for them. We go in, we identify their problems that can be fixed with AI. We have 20,000 entrepreneurs in our network. We reach out to them. We run a hackathon. They come up with solutions that are wholly appropriate to their problems. And then the corporate then sponsors them to come into the next cohort. So it's a great way for them to actually do very fast R&D without any of the risk. They have no risk of getting fired because they've outsourced it to us. What that means is that our guys are getting into all the different departments within a corporate. And AI is pervasive everywhere. It doesn't have to be the next Uber or the next Airbnb. There are so many terrible processes within an organization that can be fixed with AI. And that's what we're finding, sort of business solutions, but in lots of kind of back office locations. What does this mean for you? It means that our guys are creating a solution for a genuine real world problem. And the fantastic thing is the corporates are helping to iterate that solution. And what that means is that every single one of our startups has letters of intent from corporates stating that when it's built, they want to do a proof of concept. Now, why is that important for you? That is the best way of you de-risking your investments. If you have a big corporate who's on the hook, who's interested, who's put it in writing, then you're almost there, because that means we can get to revenues faster. Of course, AI is self-learning, so everything happens at the speed of light. We get to validate faster. And of course, because we're getting rid of manual processes, we're getting rid of people. And what does that mean? It means we're delivering solutions with higher margins. Brand new revenue streams. Hands up who listens to Audible. Audible, yeah? Okay, I love Audible. AI has absolutely ruined my life because they've found out exactly what I like. Every book I listen to, they play 5 minutes of a book that I've not yet bought. And I go, oh yeah, okay, well, sounds interesting. And that's it. They've got me hooked. I swear to God, it's like crack cocaine. So I keep buying more books. I've got 950 books on my mobile phone. I just keep adding another credit. So that's the whole point with AI. It identifies your kind of personal desires and it delivers what you really want. So there are tons of brand new revenue streams that AI are generating. Of course, the great thing is, so if you get revenues, and that means you don't need as much investment, you get to your monthly recurring revenues. I think everybody knows to do a seed round, they've got to be generating at least £25,000 per month for 3 months. But we can get to those funding milestones quicker. And do you know what that means? We have less reliance on the vulture capitals. So I've been absolutely trampled all over as a business angel from VCs. If we can actually get to revenues, companies may not need to take another funding round. They can maybe do it through a debt instrument, and that's when the banks maybe, for the first time ever, are useful. And what does that mean? That means you have less dilution. You have greater ownership of this business, and that's the point. Requirements for operational efficiency. That's a fancy word of saying corporates are going to get rid of thousands of people. It's inevitable. It's like stopping the Industrial Revolution. It cannot happen. So there will be huge change of people, but there's a lot of people who do really useless things, pointless, utterly pointless. I mean, I don't know about you, but when I call a call center, customer service, that's 4 hours I'm never going to get back. So we will never, ever, because customer service are the first people to go, because AI does a million times better job. We'll never have to go through that awful wooden scripts that they have to do at Indian call centers. That's all gone. And of course, it's not just corporates, SMEs. I've only got 12 people in my company, but we use AI substantially, and a lot of SMEs will do the same. But of course, corporates have a huge advantage, because what AI is great at doing is sucking in huge amounts of data, and that's what they generate a lot of. So it could be everything from personas to transactions to spreadsheets to it could be receipts to anything, PDFs. It will ingest it all, and for the first time ever, it will be able to make sense of it. They will be able to understand their customer profile a lot better, so they can be able to cross-sell, upsell, and maybe even sell new things. Now, every person that I've seen who's talked about AI, there's not one of them that has said any different. They've all predicted that AI will be significantly bigger than the internet. And there's no great surprise, because it literally will be in every facet of every corporate and every SME. So corporates are greedy, but they're also paranoid. So I was speaking to a very senior person at Siemens, and I said, Rob, are you not paranoid that one of your competitors are going to kind of leapfrog you? And he went, well, we keep a watching brief. We look at what they're doing. But the key thing is, we've got a war chest. So all we're going to do is we're going to buy our way to the front. So as soon as I heard that, I was like, that's music to my ears, because all they want to do is they want to catch up if a competitor. So this is the great thing. Because of this paranoia, I think there'll be a feeding frenzy. And therefore, as a consequence, they rely on disruptive startups. Now, once they've done a successful proof of concept, do you think they want that solution getting into the hands of their competitors? Of course not. So I've done my exits, my 3 big ones. I've sold too soon. There's no way I can be told what to do by a VC, is my personality. So I'd rather sell too soon in a trade sale. My last one I did, 8x return. I was out in 3 years and 10 months. There are forecasts out there that trade sales will increase by a whopping 50%. So if you guys can get in on SEIS, if you guys can kind of get out within 4 years on an 8x return, that's pretty decent. So we all know AI, there's going to be exponential market growth. Unicorns. I don't know if you know, there are 18 AI unicorns that achieve unicorn status in less than 2 years. Everything moves at the speed of light when it comes to AI. Statistically, in terms of the numbers of companies that we produce, we will get a unicorn once every 14 months. And what I'd urge you to do is have a look at cohort 5, because there are some very interesting companies there that could qualify for that. And of course, the big thing is, because we're generating revenues, you will face less dilution. And of course, because it's quite frothy, there's more investors who want to get in. Yes, you get in and it's a higher valuation, but the great news is you get out and it's a much higher valuation. So cohort 5, let's just have a look at some of the industry verticals within cohort 5. We've got fintech, procurement, edtech, travel and sports, prop tech, and medtech. So if you've got good experience in any of those categories, or you've had some good investments in the past, plus we've also got health tech, CRM, DevOps, email marketing, VX and gaming, and ad tech. So there should be something for everybody. We have a stand over the corner near the main stage over there. But, let me have a look at time-wise. Sorry, hang on, let me just see. Hang on. All right, so we've got plenty of time. So if you have any SEIS allowance left for tax year 24-25, you still have 7 days left to invest in this tax year. So as we all know, nobody wants to hand over their hard-earned money to Rachel from accounts. Honestly, why? You've worked hard for that. So what we would urge you to do is make an investment into an AI startup. As you know, under SEIS, all our guys are SEIS, you get 50% of that refunded by HMRC. If it all goes horribly wrong within 3 years, you then get a further 25% back. So you are only risking 25% of your capital in any of these investments. But here's the kicker. Rachel here from Lego, she decided to increase capital gains tax by 25%. Outrageous, you know, for entrepreneurs and startups. It's really annoying. But the great thing about you guys is if you invest in any of these guys, you pay 0 capital gains tax. So it's like a double win. Now, our guys, of course, because they've gone through this rigorous process, they all have a data room. Everything you could possibly imagine is in that data room. So 4 hours of due diligence, you're done. You're sorted. You can make a decision. Term sheet is in there. Bank account details are in there. We can move very, very quickly. However, if you wanted to see them in action, we have 2 fantastic investor events next Tuesday and next Wednesday. Great venue, 194 Piccadilly, right next to Piccadilly Circus Station. Great venue. They stand up for 3 minutes, do a PowerPoint presentation. We've got delicious food and beverage, and then you can chat to the founders. So either get your phones out and register for that event, or come over and see us on the stand and we'll get you registered for those events. Starts at 6 o'clock, finishes at 9 o'clock. So, in conclusion, if you've got the balls, we'll build the bridges. Thank you.